Okay, thank you. Well, I guess maybe since everyone already had their introductions by the...
I think Daryl brought his fan club.
Daryl definitely had the most...
So I have to start first?
Yeah.
We know where he's spending his money last night.
Well, listen, thanks for having us, Taipei. I think today we'll really keep this, very, it's really just a dialogue amongst, VCs and, I guess to start off, really just wanted to, I think obviously the markets have been super exciting, especially post-election with the positive sentiment with, Trump winning the election and with the price action, et cetera. So really just wanted to kick off by asking the panelists, at this point in time, what are you, and it could be any topic, right? Whether or not it's regulatory, on the investment side, which area of focus, what's sort of the most exciting thing for you at this point? And maybe start, with Akio.
So I think we actually all come from different geographies. And so from my side, because we spent actually a lot of time both here in Taiwan, but also in Japan, I can tell a bit of things that we've been focused on in markets like Japan. And Japan has been kind of a weird place where, compared to especially the Western counterparts, corporate involvement in crypto and Web3 has been very active. And I'm talking about like large listed companies. If you look at companies like Sony, for example, they've been very close with one of the project like A-Star in Japan. But now, with the folks of A-Star, they launched their own L1 called Sonium. And alongside, they had actually acquired Japan arm of companies like Amber. So actually, Japanese big corporates are actually loading up on Web3 and crypto and stablecoin capabilities. And we are actually closely watching some of the ramifications, because I think now that theme might be going global with, if you look at a purchase of Bridge by Stripe, which is, very interesting, I think, acquisition. So because one of the theme areas we've been focused on stablecoin, along with entertainment, which is another strength, but we think there's actually some real action going on here. But other than that, we are currently focused on bringing more liquidity to our existing positions. That's an important theme.
Absolutely.
Right. It's so good to meet the old guys here this morning. I come from Jupiter Dragon. We are a very long history in the blockchain area since 2015. To say that, sometimes we also quite confused, and also the investment strategy also pretty dynamic. We may revise that, change that from time to time in this period, in this bull market, in the bear market, right? So it's always happened. So when Nester, you're asking about what we feel about the market today, we do pivot a little bit our strategy. For example, we do have an accelerator program with Cyberport. We're just talking about Hong Kong, right? Yes, we do have a joint program officially engaged with Cyberport.
What do you do there?
Yeah, let me give you more detail later about accelerator, right, in Cyber. Because, okay, I can address this one. Because in the past, we do have a lot of layer one project. So most of them, they have a foundation, right? From the old days, something like a Neo, like a VChain, Qton, right? If you talk about 2-3 years ago, you may see Project Galaxy. You may see CyberConnect. Some project, they have a good liquidity from the market, so they want to build up the ecosystem. However, they want to very focus on what they want. So they are not able to easily have a venture arm to looking for a project from the market. And most of case, they are not able to fit into their ecosystem strategy. So they want to do something more specific. With, let's say, this accelerator program actually is going to engage, also emerge most of the traditional, I would say, infra provider foundation. They want to build up something based on their new idea. So that's the purpose, by the way. So anyway, so go back to our mainstream. That for now, we still focus quite broad, I would say. If I'm not wrong, in the past 3 months, we invest 3 deals. It's gaming project. People, I guess people are not talking about gaming that much compared before, right?
We do gaming too.
Okay. Okay, yes, in the past 3. And again, in the past 3 months, I guess we also invested something about it based on the UTSO ecosystem. Just UTSO, I don't say in the Bitcoin, but because it's quite different, right? Based on UTSO. And again, of course, as a traditional venture capital, we may not necessarily to speak out or say pay a lot of attention or pay a lot of effort on the liquidation, because normally our fund period is something like 7 years.
Right.
So, well, I don't know who you guys, right? But however, we also pay attention about the so-called bull market and bear market. We like to make sure the project able to survive in this cycle, you know, till next cycle.
And are you calling current market bull or bear? Or both?
Still bull, right. But maybe only till to next year, right? So we have to make sure the project able to survive, you know, another 2-3 years later. Yeah. So that's maybe a little different. But again, I think we do discuss the strategy internally every week. So, well, pretty dynamic, I would say.
No, absolutely. And we'll, you know, go back to that after Daryl, for sure.
I think in terms of the 2 observations we've made, I think the first one is that, you know, I think, you know, Akio and Richard have already kind of mentioned that, which is retail is going strong, but I think Akio and I, behind the scenes, we're talking about like how the retail market is going this way, but the venture market is going this way. And I think
huge gap.
Huge gap. And the thing is that majority of the venture funds that were active before, they are moving towards liquid strategies, right? Because obviously there's, you know, greater upside, and at the end of the day, we have, you know, obligations to our investors. But the thing is that when this gap happens, you know, what does it actually mean for the projects and what has changed? So I think I've also shared these, I would say that what we've seen as well is a lot of projects right now are going for fair launches, right? And so that means that, you know, previously where you have VCs coming in early and then you raise, you know, multiple rounds, you end up, you know, stripping that away, going back to the old days of ICOs in a more, but of course in a more controlled environment, not like, you know, just blindly, just, you know, 100% in circulation right now. It's more, you know, maybe day 1 you have up to like 60% in circulation supply, and then by month 3 you're probably up to 80 itself. So this is what we've been observing that has kind of worked out well. And also a lot of the VC funds are also more supportive of that because you essentially save a shit ton of money from the listing fees, right? And of course, all the ancillaries that comes with it. So I think that's kind of like the first observation, you know, we've made in terms of how, you know, venture capital funding has kind of moved towards into that direction itself. And I think secondly is that from a VC perspective, it's either they're going towards the liquid route or, you know, like what Richard is doing, right, which is extremely hands-on. And look for us, like right now, we have our own like portfolio development strategy, which is if we were investing in you guys, in the first 90 days for post investments, we will actually sit down with you and work with you on a plan specifically to you on how we can actually support you, be it connecting you to like foundations, connecting you to listing teams, connecting you to like market makers. Everybody can like support you along the way, because that's the only way to kind of help you. The old days of like, you know, just throwing, you know, checks at, you know, randomly, blindly, it doesn't kind of work anymore. Yeah. Absolutely.
I think capital, there's no shortage of capital, but, you know, how do you really differentiate yourself as a VC from that, you know, post-investment support? I think that's pretty crucial in, you know, getting into the best deals, because ultimately that's what the project founders are looking for. You know, I think you guys had touched upon, you know, the fair launch model, and I think, you know, over the last couple of launches that we've seen, your Hyperliquids, Banana, Sanctum, all of these have, you know, performed fairly well from their initial TGE price. And obviously price is not, you know, we're all long-term investors here, so not, you know, price is just sort of, you know, it's always a plus, right? But I guess, for those in the audience that are project founders today seeking for early investments, what's your advice given the current market dynamic to these projects on what you're looking for that will ultimately get you to write a check?
But can we actually do a quick survey and who's actually here? Who's actually involved with the projects here? First. Not much. Then the rest of you who are here, are you investors? Please raise a hand. And
Retail participants?
yeah.
Yeah, so it's a good mix. So maybe we start with for the project founders, what would be that advice to them?
Yeah, I think for us, I think this goes back to actually Daryl's comment earlier that we are still investing. I think all of us are, but our pace has slowed down, and that means we're actually way pickier than we used to be 2 years ago. I'm not saying we were all totally careless then, but compared to them, definitely pickier. That means we do actually spend more time because we can on due diligence and on the founder's background, the team, but also their exit potential. Right, the market is now evolved very differently from how it was 2 years ago. So I think what you can expect is that there is no quick check anymore unless you're some amazing, triple serial entrepreneurs with nothing but success. But except for those very unusual cases, we do actually take time, like normal venture capital investment.
Okay.
Yeah, I mentioned earlier that our strategy is pretty dynamic, right? In the past 6 months, maybe there's a lot of meme coin come up from market, right? It's a fair launch, definitely, and there's some more a little bit innovative meme coin, for example, like AI 16Z. They're using the AI agent and try to XYZ, right? So that's not something that as a venture capital we are able to participate, right? Because that's fair launch. And, but we also feel anxious because we do know there's a market there for sure.
Sure.
So, so we also internally think about how we are able to, find a way to participate in that part. That's one thing. Second, again, as a traditional venture capital, most of our strategy is still quite old school. I can give some example. Now we have a very big sector focused on AI. Again, I'm talking about AI 16Z, right? There's AI plus Web3 if you want to give a very big hat. But indeed, there's a lot of professors doing this, a lot of work on this sector, AI plus Web3, AI plus blockchain XYZ, right? So we do have a very big sector only focused on 2 professors. Professor from CMU, from USC. If I'm not remember, we do have a latest deal. That's a professor from USC, by the way. So CMU and also, again, we spend a lot of time with Hong Kong University, Hong Kong Polytech, and Hong Kong, right? There's 4 universities there. So we try to figure out if we are able to incubate, not necessarily incubate. As a venture capital, we do not have an incubation business. But anyway, just try to support those professors and to do some more infrastructure project. That's something we can do now.
Absolutely.
I think for us right now, because we've been, like I kind of mentioned, seeing a lot of projects moving towards fair launches, really the key right now is still traction for us at the end of the day. And I think traction is very subjective, right? But I think for us, it just means that you are constantly, building and selling out there and building a community. In fact, I think community is number 1 for everything else, right? I mean, what I always share with people is if you're investing in crypto, you're not investing in value investments, you're doing attention. You're kind of like your attention economy.
Absolutely.
Right? So whoever captures the most attention wins. And that means that if you're a project founder, at least from our perspective, if you want to check from us, focus on community building, focus on your users, that's what's important. I mean, look at all the recent projects that were successful for the fair launch itself. They were successful because they really prioritized their community first, right? In terms of not just rewarding them, but also making sure that they're creating a product that users wants to use, which should be the essence of your business in the first place. So I think that's kind of like for us what's important, and of course you as a founder itself, the kind of grit that you possess. So I think these are the few things that we kind of look out for.
Oh, completely agree. I mean, for the Animoca Ventures side, the one thing I always say, especially when we're looking at consumer dApps, is your product 10 times better than what the current alternative? And, if so, then obviously I think team, founder, those things are probably the most important, but the product itself, like you said, right, it actually has to, does it either solve a problem or does it have some long-term sustainable moat? Because I think there's a lot of, it's easy to fork a lot of different, ideas and projects across different chains, et cetera, make a slight change and slap on a new logo and that's it. And I think a lot of guys tend to focus on, they focus on getting to the TGE as if that's the end game, but it's not. That's actually the beginning. You really have to focus on making, driving value back to that token. So completely agree there. We're all long-term investors, but as good investors, we also know that proper entries and exits are important. I always use this example. If you invested in Twitter 10 years before Elon took it private, you would have made zero. You would have been flat. Even though all the, every single metric just, skyrocketed, right? But market timing matters. Now, I guess for the audience and for myself too, when I am speaking to different market participants, I'm always wondering, what is your view in terms of market timing? What sort of signals are you looking at to signal that, hey, maybe we've reached a price peak for this current cycle? I guess I'm curious on the panelist's view on what those signals are, and if you have some sort of range of timing when you expect this market to sort of hit the peak, or is it a super cycle, given all the institutional flow and such. So yeah, be curious to hear from you guys.
You want to go first?
Well, yes. Again, we do pay a lot of time to discuss this. For example, we have a fund number 2, actually is going to be exit next year, 2020.
What's the
right.
vintage of that fund?
That's a 5+2. I could be 5+2 years, could be. But anyway, so for this bull market, well, always for the venture capital for whatever investment, return is the first priority. Exit and return, okay? Exit and return. So we always think about how we are able to exit this project, especially for the token deal, right? That only can be listed on XYZ exchange, right? So the possibility to exit. And then you got the vesting schedule release XYZ%, right? So yeah, I can give you one very example, like CyberConnect. They also have an OTC deal and also have a very special agreement with Binance. And then Binance, okay, you need to lock up XYZ, the more longer vesting term because, right, the term condition. And then we need to deal with that with OTC because of exit strategy. So again, as a venture capital, since we are a very old school style and also long history, but again, we still quite focused on the exit. So again, for next year, we are going to, for this bull market period, we also try to every way to exit our project,
And are there sort of, I guess, from, what signals from the market, I guess, are you looking for? Is it, the drying up of ETF flows? Is it, I guess everyone has sort of indicators that they're looking at, just so, we sort of, know the thought process.
Well, unfortunately, there's a correlation, but a very loose correlation between the price of BTC versus kind of altcoin portfolio that we have. So I think we ultimately really need to, we obviously look at the overall market numbers, but we actually look at, so we have our own tracking of our portfolio and related companies. And that trend obviously is loosely correlated with the larger market movement, but not always, as you know. So it's you do have to actually watch your exact portfolio, the movement. What do I really care? I think, as like Richard said, as VCs, we need to create exit, and pricing is important, but also liquidity is even more important because we are not small retail investors. We have positions that could impact the prices very easily. So that's actually for pricing, and actually just as important is the liquidity volume of the given token.
Completely agree. And, you know, as you mentioned, right, the markets it's not like, you know, the prior cycles where everything moves together. You already have seen the divergence between Bitcoin and, you know, largely from the alts. I guess the question is, with the current institutional flow, right? Because you mentioned that it doesn't necessarily correlate to individual projects and the altcoins that we invest in. So do you see this liquidity coming in? Where do you see that liquidity flowing? Like, do you see it flow? Because obviously this cycle, you have seen that it's not like other altcoin cycles where everything goes up in tandem, right? You have small pockets, maybe 12 to 15 tokens that are really ripping, and everything else is kind of relatively flat. So it's completely to your point. So I guess, where do you see all this institutional liquidity flowing into? Which areas do you see that flowing into in the altcoin market?
I think if I may add on this is that I don't think anyone can kind of make that observation because, as mentioned, right, like this institutional side is kind of like broken up into a couple of parts. You have one part which is owned by the traditional financing institutions. Those are the guys that's bringing the ETF inflows, right? But that's only, you know, your Bitcoin and ETH. But then you also have, you know, how I mentioned about how majority of the venture funds are moving towards liquid strategy itself.
Yeah.
So those guys are the ones that are looking at alts and also the new launches itself. But of course, you also have another group of people which is kind of sitting in between. They're doing a lot of the OTC deals, right? Deals behind the back where they're buying straight out from the treasury itself. So I would say that it's quite dynamic. It's not as straightforward as it seems. But, you know, we've been seeing a lot of flows towards, you know, the DeFi side of things. If you're talking about specific industry or subsector of tokens where you're seeing inflows itself, or even infra. But other than that, you know, I don't think we could see any observations made from that. And I think, you know, going down back to exit liquidity is every different fund is subjective, right? Ours is actually one of the shortest ones. We're like 3+2. So it's kind of like, is this cycle or is like done, right? And the reason why we're timing it is because we know that it's either this cycle or it's not, right? And we've been seeing that a lot, as I mentioned, because of the fair launches and all that. And so we're fairly confident in our strategy of things. And I think every fund itself, at least for us, the way we do it is that as long as it hits our price, you know what, we will kind of exit a portion of it and just leave it till the end of the fund before, you know, divesting the whole stake itself, you know, altogether. And I think projects, founders, you have to understand this. Your, you know, investor will eventually exit the entire position because they're legally obliged to do so. That's something that people always forgot for some reason. Yeah.
It has nothing to do with whether you love the founders.
Yeah, we don't hate you guys. We could go to jail. Like if we don't exit, we could go to jail. So.
No, you're absolutely right. And I think, look, I think fiduciary responsibilities to LPs come first and foremost. I think that's why when Richard mentioning ROI is most important, completely true. And I think, you know, since Akio, you know, mentioned there's, you know, we have investors, retail, project founders alike in this audience. I guess, curious to hear from the panelists, you know, just in terms of, from the new fund and LP perspective, right? Because during the peak of the last bull run, you had, you know, every venture fund coming up with a minimum $100 million fund, multi-billion-dollar funds. We're not seeing that quite yet in this environment. We're seeing some, but I think numbers much smaller. How do you guys view the VC funding environment? And do you guys have high expectations, or do you guys think this time it's a little bit different? Just curious to hear your views on that.
So because we have crypto and non-crypto fund within our universe, because we have IVC is a crypto brand, but we have a Headline, which is a traditional Web2 brand. And I can definitely tell you from the funding market side, I think if you look at last 3 years, traditional VC funding has exploded on the theme of AI, and that's for sure. And I think it has impact on crypto in a couple of ways, right? Obviously, crypto as an investment category, I think in relative terms has shrunk because other theme is just huge. And actually the AI theme has also eaten up a lot of volume from other traditional VC investment sectors, like gaming funding actually didn't increase because all the new AI themes have taken the budget. And so within that, I think interesting dynamics happen. What we are seeing on the VC side is actually also being played on the founder side. A lot of crypto funds that I used to know, recently they have a new name and new identity, and they're now doing AI projects. So there's an interesting balancing on the investor side, on the founder side. So what does that mean? Well, obviously, people who are still doing, I think, hardcore people are most likely maybe higher quality people. But we also have perhaps smaller check size, relatively speaking, in the whole VC universe. So I think that's kind of the dynamics within we play today. And anyhow, that's at least our observation sitting on both sides.
Oh, absolutely.
Yeah, actually, we always have a new fund to set up, and I do have a very special idea for this year because the bull market coming, so a lot of traditional money, they feel more interest. They see the Bitcoin price up, right? So they are eager, like a FOMO for those traditional guy, right? And when I say traditional guy, because I'm based in Shanghai, and there's a lot of RMB money there, right? And also Hong Kong, also China, they also not necessarily encourage, but what they can do is only RWA only. That's the only thing they can do, especially for Chinese money, right? So they need to figure out a way have their assets emerge to Web3. So I would see, just for your question, that we do see a lot of opportunity, LP opportunity, from the China domestic now. So we just figure out a structure to smooth that way and facilitate all the process for them.
So have you figured out the structure?
Yeah, sure.
We can all use that.
Right. Yes.
Well, I think for me itself, in terms of LPs, what we're seeing is, like what Akio mentioned, right? Last cycle, a lot of 100 mil funds, and then guess what? You have your low float, high FTV, no exit. A lot of people are up, paper gains, but so what? There's no DPI, right? At the end of the day, in the VC world, nobody judged you based on your MOIC. Everyone judged you based on your DPI. And truth be told, DPI is crap, total crap, right? Because no one could exit, and a lot of the LPs these days, because they're so worried about the long lockups and like the lack of a clear exit plan because of a lack of liquidity itself, a lot of them are kind of moving towards liquid investments, and that's why the VC start shifting the strategies as well, and they kind of follow suits. So I think that's kind of like a kind of a cascading effect that happened when in the last cycle, and we're kind of seeing that as well. So I think for a VC to kind of stand out and attract LP itself is either you have a shorter fund, right, or you're creating a more structured exit plan for your LPs itself. Like kind of what Richard is doing or what we're doing as well, which is telling the LPs that we have a plan to work with the companies to exit when and how, by how much, right? Rather than just spraying and praying, it's hoping for the best. Yeah, that doesn't work anymore. Yeah.
Exactly. And we are almost out of time, but before we finish, if we can just have each of the panelists provide one piece of alpha to the audience, starting with Akio.
So I mentioned that we invest in stablecoin-related ecosystem, and actually the founder of Circle, Jeremy Allaire, he actually was my first exit. I had a venture in the 90s, and I sold my first company to Jeremy Allaire. In his he had also a different software company in late 90s, and and they're also our LP in our fund as well. But one of the things actually he's been talking about for a long time is that there is need to be a native protocol for internet for money, right? And this was before he started Circle. And then what he meant was that everything on the internet is programmable, but money still remain in the analog world. And when he found a possibility around, initially with Bitcoin, and he thought that this could be the best programmable money for internet. And obviously his vision didn't work out for Circle 1.0. And then later he relaunched it as USDC stablecoin. That really took off. But but what was he talking about? Internet of money for the internet age, or programmable money. I think we are now actually starting to see the whole circle with some of the themes like Richard was talking about, the AI agent. So if you look at actually traditional stock market, most of the trading is actually already not done by people like us. It's by machines. And I think with the rise of AI agents, combined with this internet money protocol, which is, of course, what stable coins are today, I think we'll have a huge new economy potentially being unlocked. And that probably will change the face of commerce. And there will be probably some winners. Maybe some are sitting in the cyberport already. But I think it's actually an interesting theme. And it's actually very difficult for traditional VCs to imagine because, AI agent cross all the stuff, innovations that's happening in infrastructure side and, of course, financial transaction side on the blockchain might actually one day come together.
Hey, it's starting to.
And it will happen while we are sleeping.
Exactly. Well, folks, that's AI X stablecoin. That's Akio's alpha.
Yeah, well, I guess I do not have too much thing to share about this one, but AI definitely one thing. And now, in past couple of days, people talking about quantum computing again because Google has new machine come up, right? And that things are able to, resolve a lot of different. It's going to influence a lot of different industry, medical, X, Y, Z, and also AI as well, right? Biotechnology, a lot. So what I'm trying to share is that for us as again, typical venture capital, we're looking at what? We're looking at the entrepreneurship. So when you're trying to do something new, you're trying to bring something, you're trying to make something new and bring the value to what it is now for the existing food chain, value chain, whatever market, decentralized or centralized, whatever like that. The entrepreneurship is always the key thing that you need to think about. No matter what kind of tool, what kind of technology, if you are able to, or what kind of the marketing community you are able to create to support, entrepreneurship is very key thing that we always look at about the founder always say that the entrepreneurs, right? So I guess that would be the very key thing that I will give you the audience.
Absolutely. Thank you for that, Richard. And Daryl?
Well, if asking for alpha, NFA, yeah. Not financial advice, but I'm going to shamelessly shill it. So, I mean, AI agent is all the rage, but also at the same time, meme is all the rage. And unfortunately, we're not able to invest in secondaries market tokens directly, but we're able to kind of invest in infrastructures that supporting that particular environment itself. So I think for us, we've been looking at a lot of meme launchpads recently. And one of my projects, Super.meme, they're actually going to have a TG on the 17th of December, which is
right around the
next week. And
everyone
it's fair launch.
Take notes.
It's fair launch, which means that you're getting the same valuation as I am, right? So that's kind of like something that's unique. And the reason why I kind of funded them is that we kind of believe that at the end of the day, the crypto world is still fueled by the culture of wanting to make it big. And to be honest, it is the only industry that allows you to do that. I mean, you can have like, high school kids becoming millionaires just by a split second, right? And it's the only one that has no restrictions. Anyone can do it. And that's the beauty of being on chain, on the blockchain itself. So I think for us is kind of like, buying into that, that cult-like behavior, or I would say that ethos of crypto itself. And we believe that that's not ever going to go away. Since, like what, 2014 till now, that has been persistence throughout every single cycle in terms of that kind of behavior that retail.
So you're staying native.
Yeah. So that's kind of like where we're looking at right now.
Exactly. And rest assured, I will be purchasing that token on December 17th. Not financial advice. But thank you very much, panelists. Thank the audience. And thanks for Taipei Blockchain Week for having us. Thank you.
Thank you.